Hey everyone, welcome back to Weekly Market Outlook. This is for the 7th of May 2025. Let's get this started with last week's numbers. Obviously, we still have to think about how quiet the Asian session is going to be with Japan, and the Golden Week. Let's take a look at last week's number. We do have a couple of numbers that we want to focus on. Number one is obviously the advanced GDP numbers. This is the advanced GDP, quarterly GDP numbers for the US, and it printed negative 0.3. This is way below the consensus of 0.2. But further breakdown, the number indicates that this number is a little bit skewed, right? First quarter of 2025, obviously there's a lot of imports coming into the US there. This is ahead of the tariffs, and obviously we're looking at a lot of business importing a lot of the materials there before the tariff hits, and that's basically what really printed the negative number there. The trade deficit really drags the advanced GDP numbers for the US first quarter, and obviously with tariff now in place, we might see this balance out a little bit. We should be looking at less imports coming into the US in the second quarter, but whether or not that's going to have a huge impact onto the GDP numbers is yet to be seen. Obviously, if we fall into two consecutive GDP decreases, then it will actually put the US into what we call a technical recession. So something to keep in mind there. But yeah, what happened here is that market is also anticipating that since we have such a bad GDP numbers in the US, that the FOMC needs to step up a little bit more and do a little bit more of an aggressive cut. For this year, traders are starting to price in for a 4 rate cut, which is something that we will talk about for this week's number there, whether or not that's going to happen. I still don't think that's going to happen. I still think that we are likely going to be getting at best 2 rate cuts coming up from the FOMC in 2025. Personally, I would say it's 1 cut for 2025, but we'll see what happens. Still early in the year there, just past the first quarter there, obviously. Bank of Japan not hiking interest rates. This is as per expected. They're not going to be moving on that, considering the how tariff is going to create a lot of uncertainty into the market, and they just don't want to be hiking interest rate at this point in time. Bank of Japan is still expected to hike 1 more interest rate this year in 2025 by 10 basis points. So that's still in play. Not a huge interest rate hike, I'll be honest with you. It's just 10 basis points. All right. Employment numbers, labor numbers, we do get a good reading, 177,000. Consensus was 138,000. Previous month was revised down from 185,000. So labor is still strong. Unemployment rate was also stable at 4.2%. Obviously, over the weekend we have the Australian election, and Labor Party obviously won in a landslide. And I think this is actually the first time in 20 years that we had the same prime minister back to back. I think the last one was John Howard for Liberal. So yeah, it'll be very interesting to see what happens here. Obviously, the Liberals are losing a lot of the votes because of Trump there in comparison with Trump, and that didn't, quite cost him a lot there. Anyway, this week's numbers. Take a look at this week's numbers. Obviously, we want to focus on the FOMC interest rate decision. That's going to be on Thursday, 4 a.m. Sydney time. And the expectation here is that no rate change is to be expected. And again, we might get comments that might sound a little bit more on the hawkish side coming out from the FOMC. So we'll see what happens there. That's going to be the market moving event. That's going to be on Thursday morning, Sydney. 4 a.m. So, just make sure you wake up early to trade that numbers there, because that will be a market moving event. Before that, I don't think there's actually anything significant. And on Thursday as well, a little bit later in the evening, we are going to be looking at the Bank of England interest rate decision. And Bank of England is expected to reduce interest rate from 4.5% to 4.25%. The consensus for this one is actually pretty high, about 85% that we are going to be looking at that rate cut from the Bank of England. And Yeah, that's pretty much it in terms of what's likely going to be moving the market this week. I really want to focus a lot more on what the FOMC is going to be saying. Again, I'm not expecting a rate cut from them at this point in time. I don't think the market needs it. Labor data, last week obviously points to the FOMC having the evidence saying that the labor market is actually pretty strong at this point in time. Again, the threshold was at 4.5% for the unemployment rate, and we are stable at 4.2%. All right, let's take a look at the technicals here. The Aussie is gaining a little bit, but not by much. And if you can take a look at the month of April, we did see that gain on the Aussie there on the back of the weaker US dollar throughout the month of April. But after that, it can just taper off, right? We just don't have enough volume. We don't have enough momentum. Right now, we are kind of stuck at about 65 cents, and 65 cents, there's a huge order block at 65 cents here. And if we take a look at the volume development there, obviously, there's a lot more buy volume up top. So it's more of a buy side liquidity, which is actually contrarian. This would mean that there's actually going to be a lot more sellers lining up at about 65 cents. But yeah, just in case if it does overcome 65 cents on the Aussie here, the next available order block is actually located pretty far at about 69 cents. We don't actually have anything in between. Support-wise, we're above the Ichimoku cloud. Of course, we're going to be looking at support here. We're going to be looking at 63 cents as the likely support for the Aussie this week. That's about support 2 on the weekly pivot, and key for this week is around the 64 cents mark. So any break below 64 cents, we'll take it 63. But this is still going to be in a tight range, 63 to 65 cents for the Aussie here. All right. Euro also similar situation. It's kind of stuck between 2022 high and 2023 high. And obviously, if we take a look at the 22 high, that's basically the premium area where we're actually going to be looking at a lot more sellers building up there. That's about 1,500, 1.15. And support-wise, it's building up a floor, a really strong floor here. Pretty much at 1.13. So if we round things up, it is actually going to be about 1.13, and we have an order block developing here, and that order block has been functioning pretty much ever since mid-April. So we do have a very, very strong support at 1.13, and seems like traders are starting to accumulate positions there about 1.13. So any bounces off 1.1, any push higher than 1.33, that would lead 1.1330. If we overcome the pivot at 1.1330, then we will see that push higher towards 1.14, and then an eventual retest of that 1.15 level. However, do note here that if we do lose this 1.13 level, it would actually form a head and shoulder pattern. We would actually see a much deeper pullback here. Now, how deep of that pullback are we looking at? If we do lose that 1.13 level, then we anticipate a potential drop towards 1.11 on the Euro USD. Sterling also up there. We got that order block, which is also the high in September 2024. Haven't broken that level there. Previous month high is currently at about that order block, and also where we are looking at a premium zone there. Obviously, this is where a lot of sellers are starting to step in, or an area where people might actually be taking their profits out there. So this one here is kind of stuck. Really depends on the comments coming out from the Bank of England there, but whether or not at this point in time it has a huge impact, we are not quite sure. Structurally, this is still in a very bullish market structure. This is still above the Ichimoku cloud here. We basically need to come back up above 1.3330 on the daily just to move back up above the pivot level. And if that's the case, then yeah, we will be looking at that move higher towards that 1.34, potentially to retest 1.3450. Only a break above 1.3450 and 1.35 range is going to take the sterling up. Otherwise, this is likely the current top for the sterling, because the consideration here is that the constant rejection from 24 high, unlike the euro where it breaks 22 high, 23 high, sterling is just not able to overcome the 24 high at this point in time. We are also dealing with a huge order block. We're also dealing with a premium zone here, and we're also dealing with a psychological level at 1.34. So This is it. I mean, this week, if we don't see that break above that resistance there, then a lot of traders are probably just going to say, you know what, forget about it. We're just going to treat this as a double top, and this would actually push the sterling low. Now, how low can it go? We got a little bit of a support at 1.32. That's the level where we had that change of character, but any break below 1.32, it will likely cause a huge slide on the sterling. And I mean, like, how big is the slide are we looking at? We are looking at a potential move to 1.3, all the way down to 1.28. Remember, what you're looking at here on daily here is that we actually don't have a lot of support for the month of April. Until around the 1.28 area there, where we have that order block. And obviously that's around the previous month's low as well. So we're talking about huge range developing here on the sterling. If this week it's not able to push any higher, we might see that sell-off happen in the month of May. All right, lastly, we have the Dow Japanese yen. Dow Japanese yen structurally still bearish. We got constant break of structure here. No change of character is detected. We're still below the Ichimoku cloud. Every pullback is limited to about 50% here. And, if we take a look at the current price level, we got 145, 146. That's likely going to be acting as this week's resistance. Even the R1 is actually a little bit higher at 146.59, but then we have to consider the range of the market last week as well. But at this point in time, we are just eyeing 145. Any break above 145, then we're likely going to move higher towards that resistance one, about 146. But any close below 144, that could actually trigger a sell-off in the Dow Japanese yen. So any break below 144, we would actually see further push to the downside. Obviously, it's going to be gradual. We're going to be looking at 143, 142. But ultimately, what we are eyeing for as a really critical support level, or a very strong support level, where we have that order block and we also have the discount zone, that's located about 140 to 141. So yeah, if we lose 144, there's a high probability that price could continue to slide towards 140. Obviously, we're not going to be looking at one huge drop to the downside. We're likely going to be looking at a staggered move, testing support 143, 142. But out of all the pivot level here, the one that has a lot of confluence is actually going to be at support 2. That's going to be a 140.30. That's also where we have the discount zone and also the order block that we have here on the Dow Japanese yen from last year, August. So just keep that in mind. That was basically where the level where a lot of traders are looking at, picking up Dow yen for carry trades. Obviously, the situation has changed. This is currently in a very structurally bearish market on the Dow Japanese yen. So yeah, definitely still going to be looking for more selling opportunities rather than just going against the trend that we have here on the Dow Japanese yen. All right, so with that, good luck with your trades for this week, and I will see you soon.